Public blockchains, we go through and show why we're even more confident now that crypto assets are going to rival and redefine traditional asset classes. Crypto assets being valued at the end of 22 at roughly 1 trillion. We could see 25 trillion, a 25-fold increase by 2030. I know that our Bitcoin price got a lot of press this week, our price forecast. And yes, we are recommitting to the $1 million. Of course, we've had to take assumptions for corporate treasury uses of Bitcoin on balance sheets and nation state treasury uses. Those have come down a bit. But still, we do expect our base case for Bitcoin for 2030 is almost $700,000, and our bull case is roughly double that for 2030.
Famed investor Cathie Wood hailed her flagship Ark Innovation Fund as the new NASDAQ after it notched its best ever monthly performance in January. Despite a severe downturn, public blockchains continue to foster multiple revolutions. One of them is Bitcoin, says Ark Invest in its 2023 Big Ideas Research Report. Before going further in this video, make sure to hit the subscribe button for more recent updates. That's why the Bitcoin currency in the eyes of Ark is still predicted to close the decade at $1 million. Contagion caused by centralized counterparties has elevated Bitcoin's value propositions, decentralization, auditability, and transparency, Ark writes. Its network fundamentals have strengthened and its holder base has become more long-term focused. While Ark Invest acknowledges the contagion from Terra LUNA, Three Arrows Capital, Celsius, and FTX Alameda wiping out $1.5 trillion in crypto market capitalization, the firm maintains that public blockchains continue to foster financial revolution. The long-term opportunity for Bitcoin, DeFi, and Web3 is strengthening, the report said. Cryptocurrencies and smart contracts could command $20 trillion and $5 trillion in market value, respectively, during the next 10 years. Cathie tweeted that today, Ark Invest published the 7th edition of Big Ideas 2023. According to our research, the market value of disruptive innovation platforms could scale 40% at an annual rate during this cycle, from $13 trillion today to $200 trillion by 2030.
You can take a look at our analysis of smart contracts and Ethereum and how the merge is now causing actual deflation in the number in the rate of increase in the number of ether out there. In other words, right now Bitcoin is inflating at roughly, I think, 1.7%. So the supply 1.7% per year as it moves towards its mathematically metered 21 million units. And Ether, I think, has just moved into a decline in Ether. That's quite a robust statement right there. And we do see smart contracts, fees generated by smart contracts, moving from 11 billion, so nascent last year, with DeFi a part of it, NFTs as well. 11 billion last year to 450 billion by 2030.
The bullish estimates come amid a severe and lengthy crypto market rut. Bitcoin is down 65% from its all-time high in November 2021, with the industry's total market value off over 64% from its peak. The investment firm also noted that non-fungible token trading volume climbed 15% year-on-year in 2022, led by high-profile collector initiatives such as Bored Ape Yacht Club and CryptoPunks. However, the proportion of NFTs issued has shifted toward utility-based projects such as on-chain domain names and digital memberships. Given this, and thanks to decentralized proof of ownership, Ark Invest believes that global NFT transaction volume will grow more than five-fold from $22 billion today to $120 billion by 2027. However, the so-called NFT craze seemed to have already seen its peak back in January 2022. Trading volume has fallen 97% since the start of the 2022, from $17 billion down to around $466 million in September 2022.
We show that EVs have hit price parity with gas-powered vehicles, and now they're about to go into another accelerated decline in price as gas-powered vehicles just will not be able to compete. So we do think that gas-powered vehicles are at serious risk here. And we get into autonomous ride-hail, and we believe that Tesla's in the pole position there, certainly in the United States. But we also highlight once again how global oil demand is at risk because of electric and autonomous. And we would not be surprised by the year 2035 to see oil demand down 30% from where it is today. And even by 2030, by 5% or 5 million barrels per day lower than it is today. So, and we also believe that auto sales may have peaked in 2017, that ride-hail, both human-driven and that soon autonomous, are going to continue driving down the demand for autos because the capacity utilization associated with ride-hail vehicles is so much higher than personally driven vehicles.
The investment firm also predicted that electric vehicle prices will decline and sales will increase more than sevenfold or 50% at an annual rate, from roughly 7.8 million in 2022 to 60 million units in 2027. At a historical auto industry capital efficiency of $14,000 per unit capacity, the annualized $600 billion earmarked for EV investment would equate to 43 million units in annual production per year, the report said. They added that if all automakers were to realize the capital efficiency associated with EVs, $600 billion would accommodate 86 million units. However, that is a big if based on Ark Invest's math that the $14,000 cost per unit of production capacity will be halved to $7,000. The report cited Tesla Model 3 hitting price parity with gas-powered vehicles, making a case for the declining EV prices.
We go into AI and training costs that are dropping at a 70% annualized rate when you analyze both the hardware and the software involved in AI. Think about that. If you cut the cost of something 70% per year, you're going to get a lot more of it. And just to give you a sense of this, GPT-3 performance, it cost in 2020, just really 2 to 3 years ago, it cost $4.6 million to train a model with GPT level performance. Today, it costs $450,000, and by 2030, we think it'll cost $30. So we're going to see artificial intelligence impact every industry, every company, and companies not harnessing it are really going to lose out. And the biggest impact, as I mentioned before, is going to be on productivity. And we do believe that there's a $14 trillion market out there by 2030 for companies to harness and for productivity, to enjoy the productivity lift that we expect. And that forecast, that 14 trillion, is associated with a fourfold plus increase in productivity. And if we're right that we're entering into an exponential growth world, then real GDP growth should kick up here. If you look at the consensus forecast between now and 2040, you'll see it averages, this is real GDP, about 2.6%. If we are right, and these S-curves started feeding S-curves, and these new technologies start to be, are integrated into our everyday life, they go mass market, the forecast that would be consistent with technological history and consistent with these new technologies would not be 2.6% GDP growth per year, but more like 8.5% GDP growth per year, with growth between now and 2030 being roughly 6.1%, accelerating thanks to super exponential growth to 10.7%. Between 2030 and 2040. So look for the convergence piece. and learn more about how economic statistics are going to change. They're all going to be lagging this. That we know. It's already happening. But it's going to happen more and more going forward, meaning we will have to be much more skeptical about the economic statistics, the readouts that we're seeing, than we have been historically.
The tech bull already said back in May that the country's gross domestic product could grow up to 50% annually in just 12 years, thanks to artificial general intelligence. The last year's edition of Big Ideas report said the industry could grow as big as $87 trillion by 2030. The report is toplined by a bold prediction that the market value of disruptive innovation platforms could scale up from $13 trillion today to $200 trillion by 2030. That's just the contribution of the market to the global equity value, which sat at $84 trillion in 2022 and projected to increase to $97 trillion in 2030. In comparison, worldwide GDP is currently estimated to be $100 trillion, with the January 2023 World Economic Outlook update projecting that global growth will decline to 2.9% in 2023, but rise to 3.1% in 2024. Do you expect digital commodities to perform well in the coming years? Let us know in the comments section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.